Okay guys, this is going to be a little bit of a different video where it's not very edited, but I just wanted to give my thoughts on, GameStop, BlackBerry, and just meme stocks. And, this morning when I saw GameStop go up to $150 per share and it was up like 130 or 140%, as well as BlackBerry was up by 40 or 50% right off the bat. And these stocks both had tremendous weeks last week. Inside of me, I just couldn't help but feel the feeling of FOMO. And I'm sure that for those of you guys who aren't in these stocks, you also felt the same thing. Because pretty much everywhere, even at work, the water cooler channel, people were mentioning these stocks. So, people have taken notice of what Wall Street Bets has done. And if you guys didn't know about Wall Street Bets, that's primarily the reason why BlackBerry and GameStop are up right now. The underlying businesses for both these companies, especially for GameStop, I don't think there's good long-term tailwinds. However, for BlackBerry, there may be some argument that can be made. But what they have right now doesn't warrant the crazy run-ups that they've had recently. Yes, BlackBerry had their announcement that they have a partnership with Amazon. However, after that announcement, it didn't, it made the stock go up to like $12 per share, but literally the week after, the stock dropped back down to like $8 per share. And the reason why I think it dropped back down so dramatically is because a lot of people who've been holding onto BlackBerry for their dear life, they saw this as an opportunity to cash out. However, once Wall Street Bets got a hold of BlackBerry, the rest was history. BlackBerry sits at around $22.92 today. And for those of you guys who aren't in BlackBerry, I'm actually maybe in a worse position because I used to hold BlackBerry. I held about $6,000 worth of BlackBerry in one account and, another 1 or 2,000 in another account. And I sold, BlackBerry at a loss in one account. And in my Wealthsimple trade, I was swing trading it. I bought in at around $6 and sold around $7 and was planning to repeat that process. And I actually made that very clear on one of my previous videos. I think it was back in November. So you could say that, my timing was very unlucky. I was holding, the $6,000 of BlackBerry for at least a couple of years, and I figured it was time to sell it a BlackBerry just because I didn't think that, the brand was going to ever recover. People I thought would always view BlackBerry as a hardware business, no matter how hard they tried to shift the world's view of BlackBerry to be a completely software company. But, with the Amazon announcement, that did give BlackBerry some credibility. However, not as much as Wall Street Bets has given it, apparently. So I think that right now, if you guys are in BlackBerry, I'm not saying this because I'm jealous that you're in BlackBerry, but I think that you should think very carefully about what your plan is for BlackBerry. I think that the fact that BlackBerry actually released an announcement today saying that there's no new material change, or basically there's no new news that they released that could have caused the stock to go up. This is sort of to protect them and also to make sure that there's no sort of like insiders spreading rumors. And, people who in BlackBerry, I'm sure they're very aware that Wall Street Bets is pumping their stock. And in fact, management, a lot of them sold out on Friday last week. There was an article that said insiders of BlackBerry sold out, almost all their shares or a significant portion of shares. So you can tell here that even insiders were willing to cash in on this huge run up. And right now it's, a lot of Wall Street Bets or retail investors who are buying into it, hoping for the same thing that happened to BlackBerry that happened to GameStop. And I wouldn't be surprised if BlackBerry stock somehow made it to like $60 in the next month just because of this whole hype train that's going on. And we've seen that meme stocks have really taken off. And one thing that might make BlackBerry attractive to retail investors on Wall Street Bets is the fact that BlackBerry stock was very beaten down. The company, they were trading at like $6 per share. So it didn't really feel like a huge bet to put maybe like a couple $100s in. And then there's maybe other people out there who looked at the stock saying, look, this stock is at $6. It could double at $12. And if it triples, it only needs to reach $18. So I can afford to lose like $20,000. And maybe that's what people are thinking on Wall Street Bets. And if you go into Wall Street Bets, the posts that people do of the due diligence of BlackBerry, a lot of it's very like crude and calling you stupid if you're not buying it now, but they don't show that much evidence of why BlackBerry is such a great company. And the fact that the company also stated themselves that there's no new material change that could have caused the stock price to go up, I think this is sort of like a warning sign for investors right now. If you're in BlackBerry, at least cash out your principal. So if you invested $6,000 initially and tripled it, take out $6,000, so you're just playing with house money. And for those of you guys who are part of my Patreon group, you'll know that I took a little bet in BlackBerry. However, it was a very small percentage of my portfolio, and to be honest, it was an extremely short-term play betting on Wall Street bets. And I will be having a video coming out on that play that's going to release, I think, on the 27th, so 2 days from now. So for those of you guys who aren't Patreon members, you'll be able to get some insights into what I was thinking when I bought into BlackBerry and the play that I made. I will be also possibly doing some other options play on BlackBerry right now, because I do see this opportunity to capitalize on the whole Wall Street bets wave, but I am also making sure that I limit my risk, and I've got a strategy of how I'm planning to play this. I'm not just going to buy in because of FOMO, but I think that there's a certain entry point where a couple scenarios have to line up for me to buy into options plays, because I do think that this could last for maybe another month or so. It's possible that we could have some sort of slowdown in the next couple of weeks and the BlackBerry also picks up, because we can see this happen with like GameStop over the past half a year. You know, it has this huge wave up and then it has some sort of consolidation and then it goes up even further because more Redditors push it. And even the same thing's happening with like PLTR and other meme stocks that you've heard of. I also think that GameStop right now, I think GameStop investors are probably cashing out of it just because of how far it's run. And today was sort of, I see it as a last straw, you know, moving up 130% after the stock has already moved up from $5 to like, you know, $67 or $70 last week. That was already insane. And today popping by 130%, that's just way too much in my opinion. So this sort of like feels the same thing as what happened to Hertz. And for those people who got into Hertz back in the summer, you know what happened to you. So I would be very weary right now of GameStop. BlackBerry might have some short-term opportunities, but I'm not endorsing it. I think that you should only invest what you're willing to lose right now in BlackBerry. But you know, that's just my take on BlackBerry and GameStop right now. I also have this other theory right now that I just want to share here. I saw an article saying that Beyond Meat could be the next play, and you know, the reason why that Beyond Meat could be the next play is because they have a pretty high short percentage. It's at 24% today, and we saw the stock go up about 15%, and this might be shorts covering. I haven't made up my mind yet if I'm going to be playing this, but again, I'm only putting in money that I'm willing to lose, guys. For those of you guys who are beginners, I would, you know, maybe throw in 1 to 5% of your portfolio at most into these stocks. I wouldn't put your life savings into it. You know, I do think that it kind of keeps investing a little bit more exciting instead of long-term investing. So only invest what you're willing to lose in BlackBerry, GameStop, or if you decide to buy into this Beyond Meat play that I mentioned, or what other memes or whatever other meme stocks you have out there. So these are my thoughts on these meme stocks right now. And, you know, I think that one last thing that I want to make, or one last point that I want to make, is that when the market is this greedy right now, usually something bad is going to happen. So here's my little, you know, short tip for you guys. I think that it's good to have some cash on the sideline right now. We can see that penny stocks are very hot right now with retail investors, as well as these meme stocks are going up for no reason. These are two reasons why I think that we will see a correction sometime soon. I'm not going to be selling out of my stocks, but I do have a sizable cash position ready to deploy if we see like a 10 to 20% drop in the market. And that's pretty much how I'm positioning myself right now. So these are the thoughts I have, and hope you guys enjoyed it. If you guys found it informative or useful, leave a like down below, as well as subscribe, hit that notification bell if you guys are new here. There's 2 other videos that you can check out here on the screen that I've done. If you're interested in those, check them out. If you're there, I'll see you there. If not, keep up the grind and have a great day.